In 1974, a plane carrying the U.S. Treasury Secretary landed secretly in Jeddah, Saudi Arabia. No cameras, no press. Just a quiet meeting that would reshape the global economy for the next 50 years. What happened in that room created a system so powerful, so invisible, that every time you fill your car with gas, every time a shipping container crosses an ocean, every time a developing nation takes out a loan, you're participating in it without knowing. The petrodollar system isn't taught in schools, it's barely mentioned in the news, but it explains why America can run trillions in debt while other countries collapse for far less. It explains why oil prices are quoted in dollars everywhere from Tokyo to Tehran, and it might explain the next global financial crisis. Here's the story of how black gold became the foundation of American financial dominance. Let's start with a problem. By 1971, America was broke. Well, not broke exactly, but the post-World War II system was falling apart. Under the Bretton Woods Agreement, the dollar was backed by gold. Other countries could literally exchange their dollars for American gold reserves, and they were doing exactly that. France was shipping dollars across the Atlantic and demanding gold in return. Britain wanted its gold. Everyone wanted their gold. The U.S. had promised more dollars than it had gold to back them, and the world was calling the bluff. So Nixon did something radical. He ended gold convertibility entirely. No more gold standard. The dollar would float freely, backed by, well, nothing tangible. Here's the uncomfortable part. A currency backed by nothing only works if people believe in it, and belief is fragile. The dollar dropped. Inflation surged. Oil prices, which were still set by producing countries, quadrupled almost overnight during the 1973 crisis. America needed a new anchor for the dollar. It found one in the desert. Treasury Secretary William Simon's secret mission to Saudi Arabia wasn't about diplomacy, it was about survival. The deal was elegant in its simplicity. Saudi Arabia, the world's largest oil producer, would agree to price all of its oil exports exclusively in U.S. dollars. In exchange, America would provide military protection, weapons, and a promise. Saudi Arabia could invest its oil revenues in U.S. Treasury bonds, safely and discreetly. No public announcement, no treaty for Congress to debate, just a handshake that created the petrodollar system. Within years, OPEC followed. Oil, the most traded commodity on Earth, the lifeblood of industrial civilization, would be bought and sold in dollars, everywhere, always. Think about what this means. Japan needs oil. It has to acquire dollars first. Germany needs oil. Dollars first. China needs oil. Dollars first. Every country on Earth that imports energy must stockpile American currency just to keep the lights on. The dollar wasn't backed by gold anymore. It was backed by something arguably more valuable: necessity. This created a loop that economists call the petrodollar recycling system, but that name makes it sound boring. It's not boring. It's one of the most consequential financial mechanisms ever invented. Here's how it works. Oil exporting countries sell crude priced in dollars. They accumulate enormous dollar reserves, far more than they need for imports. What do they do with hundreds of billions in surplus cash? They buy American assets, treasury bonds mostly, real estate in Manhattan, investments on Wall Street. The money flows right back to the United States. Saudi Arabia alone has purchased hundreds of billions in U.S. government debt. The exact number is classified. They're one of the only countries whose treasury holdings remain secret, a special arrangement negotiated during the original deal. The effect is circular and self-reinforcing. Dollars flow out to buy oil. oil revenues flow back to buy American debt. This keeps Treasury yields low, borrowing cheap, and the American financial system flush with foreign capital. Other countries don't have this privilege. When they print money to cover deficits, they face inflation, currency collapse, IMF intervention. When America does it, the world absorbs the excess. It's not quite money printing without consequences, but it's close. Now here's where it gets interesting and where the cracks start to show. The petrodollar system depends on two things: global oil demand and global trust in American institutions. Both are shifting. China is now the world's largest oil importer, and China has started paying for some crude in yuan. Small amounts so far, test cases, but Russia, Iran, and increasingly Saudi Arabia itself have shown willingness to trade outside the dollar system. In 2023, Saudi Arabia publicly stated it was open to settling oil trades in other currencies. That would have been unthinkable a decade ago. The diplomatic relationship that underpinned the petrodollar is no longer automatic. Meanwhile, global energy is transitioning, slowly, unevenly, but genuinely. If oil becomes less central to the world economy, the automatic demand for dollars weakens. And there's the debt problem. America now owes over $34 trillion. Foreign holders, including oil exporters, own roughly a quarter of that. If they stop buying, or worse, start selling, interest rates could spike in ways that ripple through mortgages, corporate debt, and government spending. None of this is imminent collapse, but the foundation that seemed permanent suddenly looks negotiable. Here's what most people miss about the petrodollar system. It's not just about oil, it's about the infrastructure of global finance. Because oil trades in dollars, banks worldwide need dollar reserves. Because banks hold dollar reserves, they use American financial infrastructure. Because they use American infrastructure, they're subject to American regulations and, crucially, American sanctions. When the U.S. freezes a country's dollar assets, as it did to Russia, Iran, Venezuela, Afghanistan, it can do so because the dollar's centrality gives it jurisdiction. The petrodollar didn't just create demand for American currency, it created American financial power that extends far beyond its borders. Other countries have noticed. The BRICS nations are openly discussing alternatives. Central banks are buying gold at the fastest rate in decades. De-dollarization is no longer a fringe theory, it's a stated policy goal for a significant portion of the global economy. The question is whether any alternative can actually compete. The dollar has network effects that are incredibly difficult to displace. It has the deepest, most liquid markets, the most stable, relatively speaking, political system among major economies. Inertia is powerful, but so is resentment. And every time America uses financial infrastructure as a weapon, it gives other nations one more reason to build their own. 50 years ago, a quiet deal in Jeddah solved an immediate crisis. America needed to stabilize its currency, Saudi Arabia needed protection and a place to park its wealth. Both got what they wanted. What neither side could have predicted was how thoroughly that arrangement would define the rules of global finance for half a century, and how those rules would start to feel less like natural law and more like a choice that could be made differently. The petrodollar system isn't going to collapse tomorrow. It might not collapse at all, but for the first time since 1974, its permanence is a question rather than an assumption. And questions like that tend to get answered in ways nobody fully controls.